Here are my rules to help get you funded in 2024. Let's go. Now, the first one is having a clear plan laid out. You've got 3 key objectives here. You've got number 1, how much funding do you want to achieve this year? You've got number 2, how much in challenge fees is it going to cost you to reach that goal? And number 3 is realistically, how long is it going to take you to achieve that funding? And you've got to factor in that not every single challenge and verification you are going to pass. You've got certain variables to keep in mind. The key major ones are market conditions, how well are you sticking to your edge, and how emotionally focused are you during these challenges and verifications? If you fail a challenge or a verification, are you going to get back on that horse, as long as you can afford the next challenge fee, and go again to make sure that you're not delaying the progress any further because you have goals to hit by the end of the year? There's going to be a fine balance between being aggressive enough so that you can reach your goals. Let's say you wanted to be $500,000 funded this year. So you're going to take 5 100K challenges. If it's going to take you 2 months on average to pass the challenge and verification, you've got 10 months there to factor in to your 12-month time span. You've got to factor in things like, are there periods where you will not be trading? You're probably going to be sick at some point this year. It might be 1 or 2 weeks where you're not trading because of that. You're probably going to be on holiday or traveling at some point of the year, which may be at least another 2 to 3 weeks of the year. So you've got 1 month completely out, leaving you 11 months left. If you've got children, have you got school holidays? You have got Christmases, the probably 2 weeks in December that you're not trading. You're factoring in those. So really, you haven't got a year to get your goals nailed down. You've only got 10 months. So if your plan is to pass 5 100K challenges to reach $500,000 in funding, and it's going to take you 2 months on average to pass the challenge and verification, that's without failing any and restarting any, you are really cutting it fine. Not to say that it's not achievable or possible, but you've got to factor these things in, get pen and paper, write these things down, and write a contingency plan and say, if I fail a challenge, this is what I'm going to do. Number 2 is strategy. Your strategy is the thing that is going to take you technically across the line from where you are now to achieving funding status. And you ought to be using a strategy that you have at least collected enough data on and live traded for a short period of time to gain you the confidence to live execute that, especially in a funded challenge scenario where you do have additional pressures and emotions. And that strategy needs to do 2 things. It needs to prove over a period of time that it works and it gives you the returns you are going to need to get to your end of year funding goal. So if a challenge is 10% and a verification is 5%, and you need to hit basically 15% every 2 months to get your 5 funded challenges for the year, you know exactly how much percentage you're going to need with that strategy to get to your goal. If you're making 1 or 2% a month and you're going to attempt to pass 5 100K funded challenges by the end of the year, hypothetically speaking, you know that's probably not going to happen. And that's not a bad thing, because 1, 2, 3% a month is good. It's consistency, it's profitability. You might just need to go for larger accounts or less of them. And you can still get between 2 and 400K in funding by the end of the year with a monthly return of 2 or 3%. But your strategy is what is going to dictate whether you pass or you fail, or increasing the chances at least of you passing and failing based on market conditions, variables, and other external factors. What it also does is it helps to give you the emotional edge and the confidence to execute. Because if you fully believe in your strategy and you enjoy the strategy, you know it inside and out, then you're just going to execute on it day in, day out, and it's going to allow you to focus on the processes and the systems it's required to keep that steady, focused state of mind and passing funding challenges without over trading, chasing the markets, having FOMO, or taking off-plan trades. That's only going to put you further into drawdown and take you further away from your funding goals this year. The way your strategy will affect your emotions will have a direct correlation on how you perform as a trader and how your challenges and your verifications play out. If you are wishy-washy and you're not fully confident in your edge, you're going to hesitate and miss winners, or you're going to overtrade and take too many losers. And over a period of time, that is not consistency. That is not consistent behavior, and you are not going to get consistent results. Now, this third point is a major one, and I don't want you to miss this one out. And many of you are doing this. You're just going straight in because you've got a strategy, you've got goals to get funded, you've worked out how much it's going to cost you and maybe how long it's going to take you to do, and that's all you care about. You just want to prove yourself that you can do it, or prove to the people that care about you the most, that probably tell you that you're wasting your time, so you're forcing yourself into a funding challenge too soon without realizing you need a risk management plan, a solid risk management plan. You will be surprised how many people I talk to almost on a daily basis that don't actually know the variables behind trading 1, 2, or 5 pairs on one funded account, and whether they should be risking 1% per trade or 0.5, 0.25% trade, and at what stage in that challenge should they be risking these amounts. They're just going in willy-nilly with no plan and just hoping for the best. Like, you may as well just throw your money and hope it comes back into your pocket twice fold. It's not going to happen, right? You've got to have a solid plan for your risk management and how much you are willing to risk, just as solid as your mechanical trading edge. It's going to be two plans side by side that correlate with each other, and you have to follow them because that's the thing that's going to help you technically, mathematically, and emotionally, believe it or not. It might sound boring, but it's the thing that's going to get you across the line. So think about how much are you willing to risk per trade, and at what stage of your challenge. How much are you risking at opening balance on your first trade? How much are you risking if you're in drawdown, and by how much drawdown? And how much are you risking when you're in profit, and at what stage of profit? Are you going to do the same in your challenge as your verification? And are you going to do the same thing for every single challenge throughout this year? These are the questions you want to be asking yourself, and you need to have it down on paper. You've also got to think about how many pairs am I trading, and what kind of strategy am I trading? Am I trading pro higher time frame trend, or am I taking counters as well? Whatever your strategy tells you, whatever the strategy gives you options for, you need to write these things out and say, I've got this option or this option. Which one am I going to take? Because this one is going to be the slower, less risky option. This one's potentially going to be the quicker, more risky option. But quicker doesn't always mean quicker to opportunity. It can also mean quicker to max drawdown. So it really depends on your risk tolerance. But whatever kind of trader you are, you need to make sure you've got that risk management plan, it's nailed down, and you follow it to a T mechanically every single day. Okay, and the last one I'm going to leave you with today in helping you getting your funded goals in 2024 is having the correct psychology. I know it's boring, I know everyone talks about it, but it's super important. You can have the best strategy and nail down your risk management plan, but if you're going into the markets, especially funding challenges, with the wrong psychology, you're going to fail. You really need both elements. I hear people and traders and mentors and coaches talking about which one's more important, and none of them are wrong. I don't think any of them are right either. I think they're both equally as important. Yes, you need an edge, you need a strategy, 100%, super important, but you also need that emotional psychology in place. You need to be focused, disciplined, you need to have a tough skin, you need to know your edge inside and out, and the effects of winning trades, the effects of losing trades. You need to know that every outcome is probabilistic and random. I've had challenges where the first 5 trades are winners, okay? And I'm suppressing the excitement because I know that's not going to serve me. And I've had challenges and live accounts this year or last year that I've had 4 or 5 losing trades at the beginning. So I'm already 4 or 5 trades deep in drawdown. I'm not risking 1% because that's my management plan. And that's how I deal with that. So I know that my emotions are way down if I'm only like 1.52% in drawdown by losing 5 trades in a row, which is typically the maximum I will lose in one stage, knowing that 1 or 2 trades are going to put me back to break even, if not profit. So you've got to have that right psychology and know that if this happens, how am I going to deal with it? If that happens, how am I going to deal with it? If you're taking funding challenges to prove to yourself that you can do it, that is depending on where you are in your stages. If you're quite early on in trading, that's not a good thing. If you're 4, 5, 6 years plus into trading, you've got that mechanical edge and you're trying to prove to yourself the next stage, I'm ready for funding, I can do it. That's the right mentality, but it depends on where you are in your journey. If you're trying to pass funding challenges to make money quick, that's the wrong mentality, because making money fast means you'll lose it fast just as quick, if not faster. And if you're trying to prove to other people, that's the wrong premise as well. You should be doing it just for yourself, but thinking logically, not emotionally, and knowing, is this the right time? Just because it's a brand new year and I'm setting New Year's resolutions, and because every other trader under the sun is setting themselves new funding goals, does it mean that I need to do that? That's the question you need to be asking yourself. Are you in a position where you are learning a new strategy? Are you in a position where you're still testing a strategy that you started late last year? Are you in a position where you want to live trade that strategy to build your confidence in that edge first? And are you in a position financially where you can afford to pay for these challenges? These are the things that you need to go into 2024 asking yourself. Get pen and paper, rewatch this video and share it to your trading friends, and let's have an incredible 2024. Let's go.